Hi everyone, you are listening to Equitymaster Stock Market Wrap Up. I am Rini Mehta, and in today's podcast, I'll be taking you through what moved the markets over this week. To begin with, let me share a fact with you. In the last 1 year of stock market trading, from the Independence Day 2017 to 2018, the BSE Sensex Index has returned little more than 19%. Well, with a market full of macroeconomic developments, let's look at the key stories that I will cover today. Turkey's currency crisis, India's trade deficit widening to 5-year high in July. Is a depreciating rupee making India a weak country? India's inflation slows down in July. Shares of Sun Pharma hit 52-week high. The buzzing stocks from this week, and an amazing offer for podcast listeners. First, a quick look at the broader markets. Investors on Monday morning were in for a jolt as the equity and money markets slumped, resulting in double trouble. The BSE Sensex, which has risen more than 11% since the turn of this year, slumped by nearly 300 points on Monday. In more striking development, the rupee hit an all-time low of 70.3 against the US dollar this week. Both the gauges recovered to some extent by the end of the week. However unconnected this may seem to the common man, a bout of negative sentiment was caused due to currency doubt in Turkey. Now, what has gone wrong in Turkey? I'll get into that later, but let's have a look at the key developments in the week gone by. India's trade deficit in July widened to the most in more than 5 years, worsening the outlook for rupee that hit a record low this week. According to the data released, the gap between exports and imports reached $18 billion in July, fanned by a higher oil import bill. The wider trade gap comes at a time when inflation is easing, complicating the central bank's policy outlook. Meanwhile, RBI's latest data showed that its foreign exchange reserves were at $403 billion in the week ended 3rd August, which is $1.5 billion over the preceding week. RBI's stated position is that it does not seek to target a particular level for rupee's exchange rate against the dollar and uses its reserve to ease volatility in currency market. Now, speaking of currency markets, extending its fall, the Indian rupee breached the 70 mark and hit a new low of 70.32 for the first time against the US dollar. Furthermore, the domestic currency had recorded its biggest intraday fall in 5 years amid a global currency crisis and concerns over the risk of contagion from Turkey's financial market turmoil. The Turkish Lira sent all emerging market currencies sharply lower yesterday. Now, if I recall, 6 months back, $1 was worth around 63.9 rupees. Hence, over the last 6 months, the rupee has lost around 10% value against the dollar. But that's got all of us wondering, does a weaker currency mean that India is a weaker country? As per Vivek Kaul, it doesn't. Vivek is the editor of Vivek Kaul's diary. So what exactly does the fall in rupee mean for the Indian economy? As Vivek said, and I quote, "In the past, there have been situations where the value of currency has fallen dramatically against the dollar and other currencies, and the country has ended up in an economic crisis. One good example of this is the Southeast Asian crisis. The major point in the Southeast Asian crisis was that the central banks tried to defend the value of their currencies and lost. In an Indian case, the RBI is clearly not trying to defend the value of the rupee against the dollar at any cost. If it was, the value of the dollar against the rupee wouldn't have crossed rupees 70 as it did recently. My guess is the RBI is only trying to slow down the fall as much as possible. Hence, India is safe to that extent." Unquote. Of course, all of this does not mean that a falling rupee will have no cost. Hence, there's much more to a fall in rupee. You can check out Vivek Kaul's diary to know more about his views and opinions. Moving on, after several months of worrisome macroeconomic data and amid a free falling rupee, finally there was some good news for the economy on the inflation front. The July retail inflation came at a 9-month low of 4.17%, with the decline seen across most segments. Moreover, The WPI index also dipped to 5.09 in July, cooling off from 4-year highs seen in June. Market participants expect that if the August print for retail inflation too comes at around 4% or below, there is an expectation that the Monetary Policy Committee will not be in a hurry to go for another rate hike in the October policy review. One worrying factor is that core inflation continues to be high. In July, the figure stood at 5.82% and has remained elevated above 5% for the last 8 months. If this continues, coupled with upside risk from exchange rate and external factors, these are enough reasons for the MPC to affect another rate cut in October itself. In this context, August numbers will be watched closely. Moving on to the news from the mutual fund industry. Investors pumped a staggering 106 billion rupees in equity mutual funds in July, mainly driven by strong corporate earnings and near normal monsoon. With this, total inflow has reached to over 433 rupees billion in equities during current financial year so far. In the last few years, we are seeing that the average Indian investors are now far more financially literate and mature. They realize that India is a strong structural story and participating for the long term as reflected by the growing SIP book. Now coming to the Turkish Lira crisis. The Turkish economy has been in the doldrums for some time now, and it has worsened further due to a recent trigger. The country's inflation touched 15.9% in July. To put that in perspective, India's inflation for June stood at 5%. Turkey's debt scenario is in a bad shape. The current account deficit of the country has now reached 5% of its GDP. Meanwhile, India's CAD is hovering around 2% of its GDP under pressure from a fattening import bill due to costly crude oil. So now what exactly is behind Turkish Lira crisis? The crisis began after Donald Trump announced via Twitter a doubling of steel and aluminum tariffs on Turkey, as Washington pushed Ankara to release Andrew Brunson, a Christian pastor who is being held on terrorism charges. On Wednesday, Turkey doubled tariffs on some imports from the US, such as passenger cars, alcohol, and tobacco. President Erdogan has blamed the lira's fall on an operation against Turkey rather than the economic conditions, calling it deliberate attacks. This dispute with the US has contributed to the lira's plunge. Now, as market participants raise concerns of a wider contagion spreading through global markets, we will keep you updated from all the developments from this space. Now, among stock-specific activity this week, shares of Sun Pharma hit its 52-week high of Rs 628 on the BSE after company announced that it has received approval for a dry eye treatment drug from US FDA. Meanwhile, Sun Pharma reported better than expected June quarter results with a consolidated net profit of Rs 9.8 billion. Importantly, the management reaffirmed low double-digit top-line growth in FY19, driven by 4 specialty launches in the US, product launches from Halol, and continued growth in India and rest of the world, which will be partially offset by continued pricing pressure in the US-based business. Besides that, a weak rupee propelled IT stocks higher this week, led by Infosys, Mindtree, Oracle Financial Services, and Tech Mahindra. And by the way, if you are listening to this podcast, you are in luck. Equitymaster is hosting its biggest online webinar with the brilliant co-head of research, Rahul Shah, called the Accelerated Profits Summit. Rahul Shah is going to reveal exactly how he identified stocks which went on to beat the Sensex twice over. And podcast listeners can sign up for free to learn this market-crushing strategy. Just go to eqtm.in/sign me up to grab this offer. Well, that's all from us today. Now before signing off, we would like to know whether you like our idea of podcasts. Is there anything specific that you would want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.